Good morning, traders. Chris Bess here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Monday, September 26th, 6:58 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Hope everyone had a nice weekend, all ready to go for another week of trading here. What I want to do is switch gears a little bit. I want to give you zoom out to the big picture and let you know my thoughts on the weekly technicals across the indexes and the SPDR sectors as we head into the week. Starting off with SPY, we had the rally off of the June lows, came up, hit our downtrend line, tried to make a move above the 40-week exponential moving average. Then, of course, we've rolled over since then, and now we are challenging those June lows. And just remember from your TA 101, anytime you break a prior low, that's a technical sell signal, probably going to bring in more sellers. So it's going to be rather important this week to hold the line here at, I think that actual number is like 362. But what I wanted to point out is, should we break that? Should we break 360 or the June low on a weekly closing basis? Then, of course, that will probably open up more downside. First level I see is 340. You can see comes back in here to some resistance points, which will be support points down here. But then we've got the pre-COVID high, which is at roughly 320. You can see back here in early 2020, we were at this 320 level. And so, and remember, that was a number we talked about way back when. Keep your eye on that pre-COVID low. So first target on a break would be 340 and then 320 back at the pre-COVID high. And then that would be a mega point. You could look at this whole thing as a round trip breakout and back test, right? We spent a year going up and now a year going down. And here was the original breakout point. If you were to lose 320, that would be really bad, because that would mean you're re-entering the old trading range down below 320. And that's never a bullish move when you go back below. But we got a long ways to go before then. But those are just TA principles that we've gone over again and again and again. Moving on to the Qs, coming in here to 270 at the June lows. I think a break below here will open up these pre-COVID highs down around 230. Now, you could probably make a case that there's, some little support areas in here, but you also see that there's a big void in the volume over price profile that, combined with the break of 270 and this volume over price falling away, you might see a faster move down towards 230. And I didn't make mention of it. I'm going to go back here to the SPY chart real quick. Notice the posture of our indicators. RSI stuck in bearish regime here below 50. And also on PPO, we were flying high back here, and then we rolled over, put in this bull cross down here, but now have made a move up and have last week put in a bear cross below the zero line on PPO. And if you've been following along for the past number of years, you'll know that a PPO profile that rolls over below the zero line is, a very, very bearish move. Now, can it save it here and bounce up? Sure, anything can happen. But all I'm saying is the posture of the indicators is bearish. And same thing here. RSI trapped in the bearish regime, and now you can see that the weekly PPO is on its way to putting in, it actually crossed last week, so you've got a bear cross here as well. And remember, on the weekly charts, these indicators aren't going to, it's not like an hourly chart. These things are not going to change on a dime, so these are favoring lower prices. When we go to the IWM chart, you can see we're already at the pre-COVID highs. Right here at around 162, you can see that's right where we were before the COVID crash. So on this index, we're already there at the pre-COVID high. Now the thing we got to watch now is, do we break below and move into this prior trading range? And if you were looking for a trade, of course you're going to have trades back on SPY and QQQ as well. But if you got a break on a weekly closing basis before or below 162.5, I think if you wanted to take a long duration trade, a short trade against 162.5, what you're counting on there is, hey, we're back in the old trading range. And then you don't have to go to the point of saying, oh, we're going to the COVID lows. I don't think that's not going to say that's not going to happen, but you don't have to go to the worst extreme. Even a move to 135 down to the bottom of this range of value, that would be a great trade. So that may be something to consider if you see a breakdown below the pre-COVID highs this week. Moving on to materials, you can see we've already broken the June low. I think you've got some support here. I did not mark it in here, but I think you've got some support at 68. You can see a cluster of price reactions here along that line. So I would say 68 and then 64 on materials. And you can see that you've got a super well-defined trend on RSI below 50 and PPO as well, turning down. XLC also, take note, here's the pre-COVID high. Back here at, call it 56.50, and now we're well below that now. So now we're heading towards 46 down here at, if you go back in the chart, you'll see some support back in there. But remember, the two top components of XLC are Google and Meta. Those comprise 44% of this index, and those two charts have looked just terrible in the last number of weeks. So I would expect this to come down. If Google and Meta, hit their measured move targets, and we've been following along on those, I would expect this to at least come down into this 46 range. Energy, through all this time, has been resilient. Just dropped out of its uptrend channel on last week. You can see we're clinging to the 40-week exponential moving average here at 71.50. I think that would be a great pivot point for you to trade against on a weekly chart. We do have a level of support here at 65, but then you see a big void in the charts that would take us down into the 55 range if 65 were to break. So kind of mission critical on energy. You can see here how the profile is totally different than the other charts that we've looked at. Still in the bullish regime, but you can notice that PPO rolled down right in the last week or so. And so now we're coming up to a critical juncture at the 0 line. And, as we've been talking about, balancing the demand for oil, recession, economic slowdown, etc., versus the constrained supply of oil. So that'll be really interesting to watch. Really one of the most bullish charts in the deck this morning. Just now creeping below this uptrend channel. Financials, same kind of look as some of our other charts. Persistent bearish RSI, bearish PPO with a little bounce and starting to roll over and approaching those June lows here at 30.5. You can see there was a lot of support touches back in June and early July before it broke out. And now I think anything below 30 really opens the door down towards 27 on financials. Same look on industrials. Persistent bearish RSI. Got a bear cross on PPO just below the 0 line and testing the June lows. And take note, 80 was the pre-COVID high. So we're right there. A break of 83 brings you down to 80 probably rather quickly, and then that's going to be a mega line on the chart. And given where we are, remember, support is support until and unless broken. The pre-COVID highs should be, mega support. Mega support. That doesn't mean it can't break, but it makes it, super important to hold. You've got really the whole stock market underneath as support. And if it can't hold that pre-COVID high, then you're going to most certainly be looking for lower prices. Technology, testing the June lows. And one thing that's different on this chart is we're still quite a bit of ways from the pre-COVID high, which was all the way down here at 100, and we're still sitting at 125 more or less. I think if we clearly take out the June lows this week, then you can see the volume over price falls away, and really support doesn't come back in till about 107.50, and then the pre-COVID highs come in at roughly 100. So this is going to be really important to watch this week, because you've got basically an air gap between 125 and 107.50. That would be a significant drop. And you can see here again, persistent bearish RSI, bear cross on PPO leads me to believe that the indicators are favoring bearish outcomes from here. Staples, very defensive sector, but we're right here at an important pivot point at 69. You can see the large volume over price bar here. You've got a little level right below, but then we've got a void in the charts and a gap down towards 63. I think there's probably better places, to watch closely. I think these staple names will probably outperform, even though they're going down. I don't think they're going to go down as much as technology or some of these other sectors. They're called defensives for a reason. But if you think about it, and we'll talk about this with well, we can just talk about it with XLU as well. You can see the trend has been up, and we're still above the 40-week and within the channel. But a lot of people buy XLP and XLU names for the dividend, right? A lot of these names yield 2.5%, 3.5% on their yield, but you got a 2-year bond at 4.25%, and you got a 10-year bond at 380. Totally risk free. If you were a yield hunter, why would you take equity risk on a Kimberly-Clark or a Procter & Gamble or some utility name with a 3% dividend when you can get 4.25% on 2-year paper and 380 on 10-year paper? So usually utilities really don't do well in a rising rate environment, and so this has really been bucking that kind of trend. But watch real closely. If price loses the 40-week moving average and loses this uptrend line, and notice the pre-COVID high was right here at 64.5, let's call it. So really, from that standpoint, not that far away from those pre-COVID high levels. Healthcare has been holding up really, really well. Hasn't really been doing anything, but we had a fake breakout, bottom of the chart, fake breakdown, top of the chart, rejected, bottom of the chart. So I think you can use this 122.50 as a nice pivot point, because you've got really about a $10 wide trading range there. If things were to fall apart, you could come down here into the 115 range, where you've got some support coming in here as well. XLY, bearish RSI, Got the PPO coming up. Looks to be rolling over to a certain degree. Remember, Amazon is 25% of this index, but still pretty far off the June lows. So that's actually been holding up pretty well. You've got a pivot point here around 147.50. I would think a break of that would bring you down into the 137.50s, and then potentially that would be your June low line in the sand there, and then you've got the pre-COVID highs at 130. Couple last charts I want to show you. That's I'll jump over. Dollar wrecking ball just keeps going. I mean, remember we actually talked about this breakout when we came back, then looked at this flag move. That flag has been, validated. That measured move target for that flag up here, 113, if you'll recall, was a measured move target. And I mean, this thing just keeps going, getting overbought on RSI, but you can see PPO just made a bullish cross, high level bullish cross up here. So if you've been playing this, well done. I would roll up your strikes and just stay ahead of any pullback that may happen. But what I wanted to show you is the oscillators. I mean, they are totally blown out. Minus 115 really has not been seen since COVID. And so we're at the point now, I mean, the rubber band is maxed out, and it either breaks and we waterfall or we snap back. But I do not see NYMO staying down here for long. So be very tactical on your intraday shorts and short-term trading. Just know that we're make or break, right? The rubber band either snaps or there's a snap back, but we are hyperextended, having gone as far as we ever have since the COVID crash. And not quite as bad on NASDAQ, down here at 90, call it 94, minus 94, but we're beyond these levels. We had a 93.5 reading back here in March of 21, but then you got to go back to the COVID lows for lower readings. So again, hyperextended. Be very tactical with your shorts, and just remember these oscillator readings, stand undefeated, right? They're going to bounce back. It's just a matter of, does that rubber band break first, or do we take a look lower, then snap back hard for whatever reason? This is a dangerous place to be maxed out long. That'll be my closing message for today. If you held some shorts over from Friday, that's fine. We had a rally into the close on Friday. Maybe you took it off, took off whatever that you had, but now we're down this morning, probably back down near those levels. So just be very judicious. Have in the back of your mind where those oscillator readings are, and don't get trapped on some kind of a snapback rally. Let's leave it there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading. What I'm going to try to do is catch up on some chart work and then come back to you later today with some more trading ideas. So let's wrap it up there. This has been Chris Best for Traders Profit Compass. Have a good day of trading. Talk to you next time.